most observable economic environment of my 30-odd year career. And it's so obvious what 2024 and 2025 are, and that's more stimulus. They're going to be cutting rates. If they screw it up and inflation does go up, they will use yield curve control, which is printing of money, to maintain interest rates, which Japan has been doing. But generally speaking, it's a year of stimulus. In a year of stimulus, as investors, we need to say, okay, what's going to create the biggest opportunity set? The multiplier on all of this is crypto. It always outperforms all other assets, particularly in these moments.
Raoul, a renowned macro analyst and influential digital asset investor, shares the general optimism prevailing in the cryptocurrency industry regarding the anticipated bull market in 2024 and 2025. Powell emphasizes the convergence of various crypto and macroeconomic factors that he believes will trigger substantial increases in crypto asset prices. From a macro perspective, Powell anticipates that, following the historical pattern of U.S. election years, the Federal Reserve will be compelled to implement measures to stimulate economic conditions and incentivize voters. These economic incentives, as per Powell, could range from significant interest rate cuts to outright money printing. As a former Goldman Sachs executive, Powell explains that 2024 marks the beginning of the debt refinancing phase within the four-year economic cycles of the Federal Reserve and other major central banks. This necessitates a shift from quantitative tightening policies to much-needed easing to manage their substantial debts. Powell delves into the concept of the everything code, comprising debt refinancing cycles and perpetual monetary debasement. He asserts that, in response to constant monetary debasement, only two asset classes consistently outperform: cryptocurrencies and technology stocks. Powell highlights the advantageous alignment of crypto's four-year halving cycles with business and U.S. election cycles. In 2024, Powell foresees a culmination of events, including a Bitcoin halving event, interest rate cuts, and monetary stimulus to ease economic conditions leading up to the election and support the servicing of the U.S. national debt, which stands at $33 trillion. This, according to Powell, sets the stage for a significant appreciation in crypto asset prices, further amplified by the expected approval of a spot Bitcoin ETF in January. Clips from Powell's recent interview with Coinbureau provide further insights into his bullish outlook for the 2024 cryptocurrency bull market.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
My view and my macro work was that the present state economy is bottoming right now. All the future forward-looking indicators all bottomed. Global liquidity, global financial conditions, they all bottomed last year. And the market's priced in a recession then. We've still got markets that are cyclical pricing in a recession now, stuff like the Russell 2000, oil markets, commodity stuff. But really all the forward-looking stuff priced it in a while ago, and it's been following financial conditions on a forward-looking basis. From all of the work that I do, I see nothing but stimulus coming this year. To Tim's point, there's, stimulus is another word for debasement of currency, and they do it in a number of different ways. The worst one, the most pernicious one, is the printing of money and putting it on the central bank balance sheet, using the balance sheet to buy debt, because what you're really doing then is pure debasement of currency, and most people don't understand what it is. They don't understand the fact that their purchasing power in asset terms goes down. So assets optically go up in value because the purchasing power of the dollar versus scarce assets goes up. And, crypto has been the best horse in that race. Technology has been particularly good at offsetting it. If you divide the S&P by the central bank balance sheet, zero performance since 2008. Gold, zero. In fact, gold is negative. Real estate, zero. It's only NASDAQ, only technology and crypto that's actually outperformed the debasement of currency. So it's really important what horse you back. So we're going into 2024. We've got sluggish economic growth. I think inflation will continue to fall all year because I think structural issues within the economy, from aging populations to AI, will actually surprise people to the downside with inflation. So I'm not an inflation sticky person. There's different types of inflation, right? We're talking asset inflation caused by debasement of currency versus CPI inflation. In an election year, the government's job is to give out as much candy as possible to voters. All they want to do is buy votes. You will always get stimulus. Since 2008, we had a great reset of the debt markets. Every major government hit 100% of GDP in debt by 2008. That's the Europeans, the Brits, the Americans, Japanese, Chinese. And what they all did was cut rates to zero in 2008. That was essentially a debt jubilee. It's like you don't pay the interest on the debt. That's really what it was. So if you don't pay the interest on the debt, what did they do? They all refied all of their debt. So it's 100% of GDP in debt. So all economic growth essentially goes to paying off the interest payments on the debt. So what you need to do is lower the interest costs of the debt. They did that, and every government reset their debt to 3 to 5 year. That 3 to 5 year cycle is the debt refi cycle. It's exactly how the economy has been working. So you come into year 4, it's the down year. That's when the economy slows because rates have gone up because they have to try and refi. What happens is rates then fall. They use the balance sheet, and they use the balance sheet to pay off the interest of the previous cycle. And I've kind of proven that out over time. That 4-year cycle is exactly the same as the Bitcoin halving cycle. Why? Because Bitcoin came in 2008. It's also the same as the presidential election cycle. Why? Stimulus, right? They're all the same thing.
In the interview, Powell characterizes the crypto market as an enduring gift that consistently delivers positive returns. Despite the occasional challenges posed by notorious crypto winters, which can be particularly severe for investors accustomed to the comparatively milder volatility of traditional assets, leading cryptocurrencies like Bitcoin continue to rank among the top-performing assets globally. Notably, crypto assets exhibit additional upside volatility, resulting in appreciable gains during the seasons of crypto spring, summer, and fall. Using the example of Bitcoin's nearly 160% increase from the same period in 2022, Powell and many others contend that the ongoing bull market is merely in its early stages. According to Powell, the current phase is akin to crypto spring, with the anticipation of both crypto and macro summer in 2024. Crypto summer is anticipated to coincide with the introduction of the ETF and the halving event, translating to heightened demand and reduced supply. On the macroeconomic front, macro summer is expected to witness increased stimulus from central banks, leading to further monetary debasement and greater incentives for individuals to invest in crypto. This dual dynamic sets the stage for an optimistic outlook in the coming seasons.
So the other thing to bear in mind about 2024, 2025 is, okay, we've now built the ETF, which I think of as a trade deal between crypto land and fiat world. It's not immigration into crypto land because these people are using centralized counterparts to do this, as opposed to myself, who will use my ledger device for self-storage. But we're going to bring a lot of FDI, foreign direct investment, and tourism income into crypto land. Huge amounts of it because of the stimulus and the fact that it's the best returning asset price on earth. So we've got that to also ignite this crypto economy. On top of that, Tim and many VCs like him have piled money in 2020 and 2021. 67 billion went in. That money has been building applications layers, infrastructure layers, all sorts of stuff. Right? A lot of this will come to market. Some of it doesn't. Some of it failed in the down cycle, but there's a lot of stuff coming to market. And so how I look at this is this cycle, as we go from 516 million wallets to, I think, 1 billion and beyond in this cycle alone, that it's going to be an everything, everywhere, all at once cycle. All of the kindling is in place. The banks, all the asset management firms are both investors, but are also building on blockchain rails, all of them. So whatever Jamie says, and I've spoken to him directly about this, that he's wildly interested in this space, and they will, JP Morgan, Goldman, everybody are building on these rails. The big brands are building on the rails for Web3. We're seeing a lot of that already in sports teams, car companies, luxury brands. I think the breakthrough of Solana compressed NFTs, allowing for 1 million NFTs to be minted for $100, means that allows ticketing and other breakthroughs of what we can use NFTs for, because NFTs are not just PFPs and stuff like that. In addition, the ongoing rise of stablecoins. That's basically a tokenized Eurodollar market that allows somebody working in the rice fields in the Philippines to own dollars, which is impossible for them. And then just the ongoing adoption of crypto. So I know it sounds ludicrously bullish, but that's where we are in the cycle. I mean, I've been in crypto since 2012. And each time you just see it grow and grow and grow as more participants come and more use cases get built out. It's a very concentrated bet, so I'm pretty much 100% crypto and I have been for a long time now. And I make asset allocations about weightings. I don't really do, and I've tried it in the past to try and own a broader diversified base of tokens. I just end up with shrapnel in my wallet that I don't care about. I like to really focus on what I'm doing. So my big focus for this cycle is Solana, and that's been for the last year. Obviously, I have a lot of ETH. I still have some Bitcoin, and then I have a few other tokens here and there. But really, it's a very concentrated bet on what I think is going to be the breakthrough for this cycle. And so, yeah, I'm not diversified at all. So I'm a terrible human being because I'm an investment guy and I should have this broad diversified portfolio. I'm not at all. I'm a profit maximalist when it comes to the opportunity set, but a philosophist when it comes to the opportunity set that this whole space provides.
Just last week, the Federal Open Committee unanimously voted to maintain the targeted range for the benchmark overnight borrowing rate between 5.25% and 5.5%. Surprisingly, committee members signaled an expectation of at least 3 rate cuts in 2024, with one member expressing the hope for as many as 5 cuts if inflation remains stable. Despite the market already factoring in approximately 5 to 6 rate cuts for the upcoming year, the FOMC's announcement and the notably dovish comments from Fed Chair Jerome Powell were unexpected. This revelation did not catch Raoul off guard, as he had been forecasting similar actions from the FOMC and Powell for several months. Do you share Powell's perspective on the motivations behind the sudden shift in the FOMC's stance? Are we on the brink of witnessing another wave of extensive money printing, increased debt, and heightened debt servicing costs? Feel free to share your thoughts and insights in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.